Hello and welcome to Wake Up and Smell the Mic S&P 500 review for Wednesday, April 5th, 2023. It's now the 4th. We start off in the S&P 500 daily chart in DeMark looking back to end of December 21. I'll zoom into the current area now. The S&P 500 daily chart has printed the combo and sequential sell setup 6 count. And to negate that for end of day on the 5th, there must be a close below 4050.83 for the price flip to the buy setup count 1. And when the sell setup counts start getting past 5 as they are now, it's more critical than ever as it's getting closer to the buy setup count 9 end count. So to lose the count with a price flip in this area, 6, 7, even 8, it is really critical that it doesn't happen, especially in this case, as it would negate the thoughts of getting above the buy TDST level, getting that qualified and confirmed, nailing the 50% qualified and confirmed exhaustion up, and then continuing on to this supply line, getting that confirmed or possibly qualified and confirmed, and then maybe stalling at this supply projection or just going right past it. And then when it starts getting up to this supply projection and this one here, and then right above that is the relative retracement up to, and that's where I would expect it to stall if it does print the sell setup end count 9. So that's what I'm expecting, to print the 9 and continue up. If it doesn't print the 9, I don't think we'll make it past this area here by the buy TDST levels. And price is looking okay in the aftermarket hours for the S&P 500 on the 4th at 8:07 p.m. Central Time. S&P 500 price 4104.50, so 4105. So S&P price would have to drop about 50 points or so to get under this close and have the price flip there. And there's really nothing underneath from this bar on the 4th to stop it. Could bounce off the conversion line and then head up. The new trend factor down 1 level is at 4011.16, right near the conversion line, but it really needs to stay above this level for tomorrow on the 5th to end the day above that. And then the next day it has to stay above this level, 4109.31, and the sell setup 8 count will print, and then this is where the 9 will print. It has to stay above 4124.51. So price needs to start moving up soon, or none of the above will happen up here, at least not in the orderly fashion that I just mentioned. It could still make it up there, but then it will have to start all over again and really struggle to get up there. And I've just drawn a downtrend line that I have in another chart here on this chart in DeMark, and that level for tomorrow on the 5th is 4147.46. So that's right in the area of this buy TDST and the qualified exhaustion up, which just needs to be tagged for more possible upside price action, but it has to get past that trend line first and the buy TDST level. The NDXHILO chart, NASDAQ 100, shows that the 5, 10, and 21 EMAs, blue, red, and gold respectively, are still pointed straight up and looking pretty good. The high-low index itself in dotted blue here has sort of halted and turned sideways there, so there could be some downward price action there, but the EMAs should keep their trajectory straight up here. The ROC 12 did turn down from very high level here and is at 140. It's way away from zero, so there are indications of stalling here, but hopefully it's just a pause. And the KSTs could indicate that pause action, with the short-term KST rolling over to the downside, went under its signal line. However, the intermediate term KST came up from below zero and went above its signal line and is looking very strong. So those two will cancel each other out, and then we have the long-term KST headed down quite significantly. So it's a pause or maybe a little bit of downside for the NASDAQ 100 big fat cap megatechs. I still see this as a buying opportunity on the pullback, especially if the S&P 500 daily chart can print the sell setup 9 end count in DeMark. And if that doesn't happen, in DeMark printing that 9, this would be approached with a great deal of caution. The S&P 500 support and resistance levels big board chart shows there is no gray area in the 4100 nor the 4000 zone. And price in the aftermarket hours for the S&P 500 at 8:36 p.m. Central Time on the 4th is 4103. So to the upside is the pivot point at 4117, and to the downside is the baseline 26 bars back concerning the lagging line S2 and the top of the cloud. The ROC 1, ATR 2 are in their green zones respectively, so the volatility is still at a minimum. The PPO extreme bumped down a little bit to 2.60% above zero. So that gives the PPO level 5 at about 3%, the upside target, and then we're back to the downtrend line in blue and the PPO 6 level at 1.67 for the downside. The New York traditional McClellan breath oscillator to get back to zero would require 2,410 decliners over advancers, so it's getting a little bit closer to zero these last couple of days. Have a great day.